This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today, we're going to speak about why residence in an insurance policy requires presence of the insured, and why a homeowner's policy is ineffective if the insured does not reside at the premises. Shanice Currie had a homeowner's insurance policy with State Auto Property and Casualty Insurance Company. After two fires severely damaged her duplex in Milwaukee, Currie sought payment from State Auto. State Auto denied the request for coverage, claiming that the duplex was not a residence and therefore was not covered by the policy. Currie, of course, sued State Auto, and the district court granted summary judgment to State Auto. In a case entitled Shanice Currie v. State Auto, a July 5, 2023 decision of the United States Court of Appeal for the Seventh Circuit, the Seventh Circuit explained the meaning of the terms residence, premises, and reside when dealing with a homeowner's insurance policy. Currie had purchased the previously abandoned duplex from the City of Milwaukee in the spring of 2018. She proceeded to install electricity and fill the bedroom with a dresser, mirror, clothing, and a bed. Yet at the time she acquired the policy, the property had no running water, kitchen appliances, no chairs or sofas in the living room, or a front door. Where a door should be, there was a wooden board that Currie would have to unscrew to enter the property. Strangers came and went, and Currie took no action to eject them. Apart from sleeping at the property 2 or 3 nights a month, Currie did not stay there. She bathed, prepared meals, kept personal belongings, and received mail at her 2 other addresses in Milwaukee. The homeowner's policy Currie purchased from State Auto for the property covered residence premises, which the policy defined as, quote, the 2, 3, or 4 family dwelling where you reside in at least one of the family units on the inception date of the policy period shown in the declarations, and which is shown as the residence premises in the declarations, close quote. Because the policy's inception date was September 15, 2018, Currie needed to reside in one of the units on the property at the date for coverage to attach. She did not. On October 31 and again on November 2, 2018, fires broke out at the property, causing extensive damage. Currie informed State Farm that the property was a total loss and sought full replacement value. State Auto denied Currie's claim, explaining that the property was never her residence. Currie, of course, sued. Everybody seems to. The district court granted State Auto's motion for summary judgment. The court held that while the operative clause in the policy, the dwelling where you reside, was ambiguous, a reasonable person would nevertheless understand the clause to require plaintiff to maintain and use the property as a home, even if it was only one residence among many. Given Currie's lack of legal and practical ties to the property, the district court found that a jury could not reasonably conclude that Currie resided there. There is no statutory definition of residence or dwelling in Wisconsin with respect to homeowners insurance coverage. Because neither occupied nor dwelling are technical terms, an appellate court may ascertain their meaning by reference to recognized dictionaries, and because Currie did not use the property as a home, the court found that no reasonable jury could conclude that she resided there. The Seventh Circuit concluded that the district court correctly concluded that Currie did not actually live at the property on the inception date or at any other time. Thus, it was not her residence. The address was not listed on her driver's license. Her mail was sent to a different location, and most telling, the property was not secure. It had no door nor facilities to support normal life. As a matter of law, therefore, Currie's property was not a residence on the policy's inception date, nor any time before or after. It was not covered by the insurance policy, and the district court's grant of summary judgment to State Auto was, according to the Seventh Circuit, proper. In my opinion, insurers will, of course, insure vacant property for an appropriate premium, and will do so using a simple fire insurance policy or a commercial property policy. But they're much more expensive than a homeowner's policy. To protect the insurer, the homeowner's policy requires the insured to reside on the property. That's the name of the policy. Since the property was not sufficiently equipped for a person to reside because it had no door, no water, and no other facilities to support normal life, Currie failed to fulfill the basic requirement for coverage, residence. Had the insurer been told the truth about the condition of the property, it probably would never have agreed to the coverage. Because of the residence condition, there was no need for the insurer to accuse the insured of fraud, although she probably obtained the coverage by fraud, since no insurer in its right mind would insure a unoccupied, boarded-up facility under a homeowner's policy. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. If you do so, you can subscribe to the blog and will be advised of every blog posting, usually 5 a week, sometimes 6. And you can also subscribe to the Rumble videos or the YouTube videos, all of which are free. And if you found these videos or the blog to be useful, please tell your friends and colleagues so that they too can subscribe. If you wish additional information on insurance, insurance law, and insurance claims and insurance fraud, you can go to the Insurance Claims Library, where most of my books have been published, or you can subscribe for a very small fee to my Substack productions or to my locals community. Thank you for your attention.